Hello guys, glad to have you on board again. Today there's a lot to talk about, so let's get straight to this. Cryptos are still very uninteresting, even though people just drive themselves crazy anytime we move just a few percents. So please don't be among the dumb guys, just wait for something reliable to happen. It's basically dying in between, and we haven't broke any significant levels so far, so just let the dumb talk and don't be among them. Despite that, we have a lot to talk about aside from the crypto sector. So yes, AUDNZD is now out of my portfolio. It's exactly what I was trying to avoid, but this one is now happening. So until further notice, I'm out of this one with a huge loss. I just took an 8% loss on the account, so definitely not the kind of day I'm liking. Yes, because just if you take this, I had leverage 5 on this asset, which means waking up this morning with an additional 4% loss on the account was definitely not what I was expecting when I opened my eyes earlier today. So this is the kind of day that obviously happened from time to time. Obviously it happens way more often to the good side of the coin, and I still tend to, I can absorb those kinds of days. They happened. Obviously, like I said, I very well don't like them, just like every normal person. I don't like to take losses, but I know they're a part of the game. All I care about is to have a positive reward in the long run. So obviously waking up with a plus 5% day definitely is great, and obviously waking up with a 5% loss is definitely not great. But as I said, I don't mind that. It's just, it had to be done. That was part of the plan. Let's just put a graph on that. So ARBA lows just basically has been saying something that is not necessarily that bad, but it's just the market is very nervous and it's breaking major support through this. So we've got two options so far in here. Either no one else at the ARBAs we'll be talking again to just clear this misunderstanding, saying we haven't never said we're going to lower rates but just do nothing, which is exactly what has been said. Actually, they didn't say they're gonna lower the rates, they just said they're just gonna balancing the rate increase or rate lowering or cutting rates. So it's basically we're gonna do nothing. We have balanced views, so we just do nothing. But the market takes that as a dovish thing, dovish sign, saying, oh God, low is changing its mind, so they're gonna cut rates instead of rising them. So definitely perceived as being a major change in monetary policy. So we're breaking through those levels because that's the market feels. I don't know what to think about it personally, because I don't think, I think the market is overreacting, but I can't afford the risk with a 5%, with a 5 leverage. We leverage just 5. So I definitely take the loss, even though I don't like that, even though I think it's absolutely not gonna last long, that this is just short-term stupid volatility to take down guys like me who were over leveraged. So I think I'm just supporting a trap in here. Definitely I think it is a trap. But the problem is the plan is the plan, and I can't do any different. I've been clear that if we broke through those levels, I had to go down, I had to turn down the trades. I did according to this plan. So if we invalidate this signal in a few days from now, you can be damn sure I'm going to get back on board with lower leverage this time. But I have absolutely no bearish conviction in this market. I'm taking down this trade for one simple reason. Not because it is a personal and sign of invalidation, just because I've gone too far in risk taking and I need to take this down. And I really need you guys to understand that, because so many times when I will invalidate a scenario, it's just because I think I've been wrong or been too aggressive, and I just need to get the hell out to get in with a better timing. In here is a pretty different scenario. I'm not getting out because I think there is going to be a better timing. I definitely not think it is. I most likely think the most appropriate timing is just right fucking now. So I might be just selling at the lowest price, and I really hate myself pushing that button, but I have absolutely no choice for two reasons, and I hope you guys really understand those reasons, because they're really key to understand who is a trader and who's a bullshitter out there. I'm just doing this for one reason. I'm managing the damn risks. I'm no god. I don't know what's going to happen. It could very well be right, and just no one will come after low speaking, and just gonna say, just let it as it is. I mean, the market took it, probably overreacted, and I definitely think that's the case, and I pretty much expect that in a few days from now someone else at the RBI will come out and just say, okay, you basically have taken this a little bit too bearish, and this is not what we meant. This is the usual standard in terms of central banking communication system. So they basically send an information that the market overreact out of, and they say someone else with a little bit more aggressive to just put the stance in between. So I definitely think that this is what's at play right now, because we absolutely didn't break anything so far. We just pulled back into that trend line that we had on the charts before, and so far I think it just means nothing but the fact that the market wants to take down stop losses, and of course mine has been included in here. So I stopped this scenario until further notice, but definitely not because I think this is bearish, and most likely just because I have no choice, and I can't afford to take the risk. I would definitely like to do this if I had a lower leverage, but basically I'm taking an 8% loss in here. And to be really clear, it's just like the euro-yen back then, when the trade has been going up to 6% loss at some point before delivering the gain. So I definitely think that in the long run, this thing will deliver. It's just that the difference is, just as we gone closer to invalidation in here in the euro-yen, it didn't trigger the invalidation. But if we had a nice bullish candle crossing that resistance, then I would have had to get the fuck out. It didn't happen, so it went just well, and we got straight to the target just a few months afterwards. I very well think it's going to be the case as well for AUDNZD. Very well think that the future is going to bring us up here, and a few months from now we'll be up from the current prices. I definitely think that this is what's the most probable. So I'm taking a loss that I don't really accept, but this is the big difference. This is where you're going to see a bullshitter and a real trader. Why do I get the fuck out? Not because I think, because that's not how it goes. Just too much risk. You get the fuck out, whether you like it or not. It's not something you discuss. It's not something to talk about. It was the plan. I said, if we go down, I'm out, and then we'll see. I exactly applied that plan, even though, and I said, I really hate myself doing this because I don't have a single clue, I don't have a single doubt about the fact that we'll be higher than that a few months from now, and definitely I'm taking a very bad decision. But it's actually the conclusion of a series of bad decisions, which led me to take that loss today. Because for those who remember, I was buying in here and I still had part of those trades. I took partial losses down the road, and then I reinforced in here to have a better. I reinforced even in here, so I took small entries in here and another set in there, which led me to have an average return in here approximately. So I had an average entry price in there with leverage, okay? And obviously I took the highest level of risk I could take, but definitely in here, if instead of this, we were just there today, breaking the resistance, I mean, it would just have been like euro-yen. I would have taken some risks, definitely, but being there, the trade turned positive. I can put the stop losses below the supports, and I can definitely reinforce the trade and take a nice gain in the end. I think that's what's going to happen. But as we go the opposite side, there is a doubt, there is a risk, because you never fucking know. Okay, the actual reason that just forced me to take that loss is just I don't fucking know. Once again, the difference is that you'll see some traders with a lot of confidence, and it's necessary to have some kind of confidence in trading, but the risk is when this turns to overconfidence, which is going to bring you to some massive losses that you must avoid. And in here, I'm just taking that loss to avoid the risk of a bigger loss that could go out of control. If I let myself go further than that, I'm definitely going to go out of control. I cannot afford being more than 8% loss. And I do that, and I afford 8% for one goddamn reason, because I had previous gains to reinvest. So I'm just losing previous gains on the AUDNZD. All right? And until further notice, I'm just going to wait to see and wait for some new informations. If this is just a trap, and if for some reasons we close there today, but by tomorrow we're inversing this with a bullish engulfing. So I'll say anytime we manage to invalidate today's breakdown candle, there is nothing to trade. It's just simple as that. It could be bearish, and if it is, I'm no longer on board, and I'm just going to let this thing fall, even if that doesn't fit the plan, that doesn't fit the technicals, that doesn't fit anything. That's how it is. Sometimes the market is irrational, and I think definitely we're overreacting after Lowe's comments and speeches. I don't nearly think, I mean, if you really have a look at what really has been said, it's absolutely not dovish. It's just the market, I think, wants to take it dovish just to take down some stop losses, and it's a short-term move that's probably going to be invalidated a few days from now. Future will tell. We're obviously going to have a look at this one, but that's the end of the story for me until further notice. We also have this trend line that I want to note. Okay, so we're probably going to close on top of this, so I very well expect that we're going to have lower shadow candles today. At least we're not going to close at the lows, so we're very well going to close in here, and future will tell if we invalidate this or keep further below. Aside from this, we also have to talk about another scenario that is really worrying me so far, which is the BUND scenario, because yes, this one is still pretty far from the expiration. If I'm right, expiration is on the 15th of March. To be confirmed. I'm hesitating between the 5th and the 15th. But anyway, we've got expiration in that area. Give me a second to validate that. All right, my bad. The expiration is on the 7th, so starting normally 3 days before. So there's from the 4th to the 7th of March. We'll have the rollover, which means I'll roll over to the next expiration. It's going to be June, starting. Let's say nearby this area is where we're going to have. It's Alt V, if I'm right. Yes. So this is the rollover for the contract. So as you can see, we've got two options. Either we try to grind our way up forever until the rollover, and we'll obviously roll over negative to the next contract, which means all my gains will be done on fucking expiration, which I would very well not like, but that's how it is. Sometimes that's the problem when you're trading with expirations. You have to deal with that shit, and generally the market will just fucks you up, just like it did back then. Expiration, you see, contract is expiring in here, next contract is starting below, and definitely my gain could be just lost in between with no chances to catch up on this. So if it happens, I'm fucked, and that's how it's going to be. So I don't know yet. I expect and I hope that the market will prevent this and will start selling before the end of the expiration, but that's something remaining to be seen. The market definitely doesn't want that, let's be honest. The market absolutely wants to surrender for God knows what reason, but that's stupid as it is, but that's how it is. And at some point, expiration is some kind of money management that you need to understand. Maybe someday we'll make a show about that, to explain you the tips and tricks about those expiration, and I sincerely hope I'm not going to be tricked in here, but that could be the case. So until further notice, I'm just waiting for this, and even if I have to roll over to the next contract and lose most of my gains because of it, then that's how it's going to be. What really bothers me is actually this, not necessarily the bonds themselves, but the yieldings we have out of those bonds, because I don't know what the fuck we're doing in here. We shouldn't be doing here anymore. We should be pretty far from that, as we've already tested this area. Stop losses are there, so what the fuck are we trying to take down those stop losses? I really don't get it. We can try taking them down, I mean going down just a bit, but what the fuck are we doing out of 0.12 or 0.11% for a 10-year yielding of a recessive economy? What the fuck is going wrong? We should be 1.20 at the current time, because ECB is not buying the bonds anymore, so who the fuck is buying this? And we definitely know that the next bonds emissions are definitely not going to be priced at that level, but for some reasons the market just plays it like that. So it's obviously irrational, but as you can as I try to teach you guys, at some point the market will and can be irrational for a long time. It's just you need to manage your risk in between. You trade something because you have a scenario. If it fits the fundamentals, then that's great. If for some reasons the market doesn't fit the fundamentals and breaks down through your stop losses, then it happens, and that's how it is. If it has to be that way, then I'm fucked, and that's how it's going to be. I'm going to be there again in March, and I just know that in the long run, even if that means being proven wrong this time, I'll be right, and I'll just take the fucking gain. So all I care is putting myself ahead of that gain. So if that means waiting for the next expiration or even the next one, I don't give a damn. I know we're heading toward 1.20 in the end, no matter what, because that's where the fundamental stands. It's just a matter of timing. So I'm speculating because that's my job. I think buying this area is definitely what needs to be done. We're now fucking bullish in this market, so I don't really understand what the fuck we're still doing in here, but we do, and that's how it is. Sometimes the market will just push your nerves to the levels. You will want to capitulate, but you don't need to do this. I think I have the signals with me. The market should react bullish. I don't know what the fuck we're doing in here. All the technicals and fundamentals push this yielding to the upside, so I'm just waiting for fucking prices to do accordingly. Until further notice, so waiting closely at the bunds, this is a very high level of concern, let's be honest, because what we're doing in here just makes absolutely no sense. It is, but it's like the entire market right now makes no sense. Look at the SPX. I mean, what the fuck are we doing up here? God knows. We shouldn't be there. We have nothing to do in here, actually. And to be really honest, this is what we have, okay? So I'm going to take you this. Sorry about that. This is exactly what I meant to be. All right, so what we're doing in here is... no, not that. I'll put it back to normal. Okay, so in the SPX, I still tend to believe that the underlying structure is that them leading diagonal. So we're bearish, but no one figures it out because we're range bearish. So everybody think there is a level of doubt, an acceptable level of doubt that leads the market to think it's both bullish and bearish in the same time. I don't really get that shit, but that's how it is. All right, so there we got this. Okay, so it's odd. Okay, those two waves to the upside, but I don't really give a shit. I just want something that match my plan. And if I'm wrong, then only price will prove me wrong. And to do that, it needs to push prices up to this area, which we're pretty much far from doing. And I've been putting Fibonacci's in here, range Fibonacci's. So I was forecasting because technically we generally fail in here. Okay, in between 61 and 76. In here we just extended just a bit higher because of that Powell's thing, but I mean I think that's just a short-term boost, but nothing close to something that will invalidate truly this sentiment we have, which I still stand to believe that we're just going to deteriorate price slowly but steadily heading into the next set of earnings release, which is going to be starting halfway through March. So next earnings release, we're going to start around that, spreading through April. And I think this area is where the nasty part will show up, because I think back then, at this point, we'll have just the worst earnings release we'll ever had. Just to be straightforward, a lot of things are deteriorating regarding earnings, because what we're having right now is for the first time a lot more assets not filling the consensus, a lot more assets actually missing a lot the consensus. Some assets have been dropping more than 20% or just 10 to 20%. So yes, we really have a dangerous future ahead of us, even though the market wants to price that as good as it could be. So to be really honest in here, I'm just going to go back again to what I thought. Give me a second. All right, sorry about that. So I don't remember what I said. Oh, sorry about that. So yes, I kind of maintain the bearish potential I see on the SPX for still the same reasons I said and believe. Sorry about that. that we're heading to the downside, and we're still respecting the previous pattern, which means normally in those leading diagonals pattern, we just need to have two waves, one side and another, and just as we did had two very nasty waves to the downside in here, the fact that we have those two very nasty waves to the upside as well can be kind of confusing, because this one may look like a trend, but it isn't. And moreover, if we fail just right in here, which is the exact price area that it's supposed to be failing down to, because normally in those structures we need to enter into wave 1 territory, meaning that failing in here could have made sense because we would have entered wave 1 territory, but statistically these structures are not necessarily this. Let me just give you some side analysis in here. We're going to make educational content. Normally those structures doesn't build that way. They build two waves to the downside, okay? Then they build two waves to the upside, all right? Then they build two waves to the downside as well, but shorter, okay, and generally two waves to the upside and two waves to the downside to terminate, okay? Generally this is how this structure builds, okay? We've got a longer two sets of waves and a shorter second one and a final one shorter than this one, okay? So we're decreasing, we're building some kind of wedges, and we're losing the momentum. In here we're doing something different. Instead of losing the momentum, we're gaining the momentum, which is really, really confusing because it's rarely happening. Normally we don't do this kind of thing, in which it requires pretty deep retracement, but normally this is how this structure plays, okay? Instead of shortening the waves are expanding. Consider this as sets of waves, okay? It's two waves to the downside, we call first bearish impulse. Then we've got two waves consolidating. Sorry about that. All right, so two waves consolidating, but these ones are expanding the amplitudes of the first set of wave, and then we've got the final set of wave, which is normally even more expanding than the previous one has been doing. So we've got something that gains in strength instead of losing strength, which is rare because that structure generally we see this way, as I said, with an opposite set of things in which waves are just contracting and shorter than the previous one. So this is generally, I don't have actual numbers to say, so it really is something to cautiously use in here, but I'm just going to give you what I feel like is happening. But I think it's 80% of those things, not say 90% of those cases, and just 10 to 12 to 20% of those cases in which the wedges are expanding. Okay, so what we're having in here is pretty odd, but it's still the same structure. It means it looks like a range, which means the early stages are really ranging and the late stages will be trending. As in here, it's the exact opposite. It starts like a huge trend that for some reasons loses some gas and terminates like a range. But in here we're doing the opposite. So consider that we're going to do making the most swings in the late stages of the first structure, first option, and second option will look like a range in the early stages and just trend brutally to terminate. Obviously, there is going to be a V-sharp reversal down the bottom, because in here, after terminating that set of wave, the market will have to consolidate two waves to the upside, okay? Because this means we are trending down. Then we consolidate, and then we start all over again with a set of 5 waves, okay? That's how this structure builds. Both ways. I mean, and after those structures, anyway, we'll have a V-sharp reverse. We'll have a consolidation coming right after. But as we will late trend on this one, meaning the very bearish potential will express itself at the very late stages of this, will first look like a range, will deeply retrace the waves, then normally will terminate. And what I would have wanted to come down to as a conclusion is that in terms of structures, for those patterns, what we do have is generally this. So we're not going to use the raise, we're going to use this, okay? Means generally the wave 4, okay, this one, the one that precedes the two final sets of waves, generally are built out of this, which means the first point of the first impulse is generally the area in which the fourth point is reversing, which means you don't see this overlap because we've had all those in-between waves in there, and you don't feel this overlap. But this is generally where you find the resistance for the fourth point. So what we're having in here is just the exact same thing. On that structure, whether it's expanding or contracting diagonals, we do generally find a wave 4 out of wave 1, first set of bearishness. All right, and that's exactly what we're doing just right here, right now. Look at where we've been retraced in the current price area. We've been retracing exactly where we've been dropping the first time. So we're just fully respecting the strategy. 2 waves to the downside, 2 waves retracing, even though we didn't perfectly make that. And if you do recall, back then I was just expecting us to slowly break through this to just have a higher high, which is what I got trapped with that G20 fucking thing, and didn't catch up with that selling entry just because I expected to go just a bit higher. But anyway, failed in here, but still we do have the 2 waves consolidating, 2 waves to the downside as well, 2 sets of waves to the upside, even though it's very brutal in here, and that V-sharp reversal may really look like something you want to buy and think the market is bullish because of. But normally, the worse is still to come, which means normally we're going to retrace to the first origin point in here, which is generally what we're going to do in those structures, which means we generally get to this wave for the first one, which means this is the structures we're having in there, okay? I'm just showing you how it goes. These are the underlying structures of Elliott waves, all right? All right? This one generally retrace the first bearish impulse in here for the final termination, retrace to the second one of the first impulse. So normally we should have, and we will have, normally it's statistically the same thing going in here. So the first wave in here can be very narrow, okay, and the final one will obviously be really surging in here because we can expect this to be playing, okay. This will come to this one, the first bearish wave normally retraces down to this area. Okay, which leaves us with a pretty fucking nasty trend to go on the end. Okay, after that set of wave, the final one is definitely gonna be the worst as hell, and it's gonna drop like shit because of it, because we'll just accumulate the momentum in here and just fail it entirely in the end. All right, so be aware that this can just look like that. So returning to this area, okay, failing from going from this area, normally we should rebounce, retrace deeply, so pretty much 60 to 76.4. So I very well expect that we'll do something like that. So we're going to pretty much drop a little bit slowly. We could retrace faster as usual, but that is definitely how it's going to look like, I think, in terms of sub-wave count. Okay, sorry, not that. God shit. All right. No way. What I've done. All right. So going back to this. Okay. Normally, so first set of wave. This one is going to be looking not that great. Okay. We're just going to go trending, but this is not going to be the trend wave. Okay. We're just going to build ourselves back to the previous lows in here. Okay. Then we may retrace approximately 61%. Okay, and then comes the final wave, which is definitely going to be the strongest. Imagine that this was nothing compared to what we'll have. It's going to be a falling fucking knife. Okay, it's going to be a huge straight line trend, few pullbacks, something pretty much like that. Okay, and we do bam, bam, 4, 5, and then terminated. Okay, and we go reaching out to the area we've been forecasting before. This is still what I think is the most probable. Going in there, and then we'll retrace 5 waves. Okay, 1, 2, 3, 4, 5. 2 waves to the downside. 1, 2, 3, 4, 5. 2 waves to the upside, and then go bearish again. Okay, that's how it's going to play according to me for now. So I don't say this is obviously the future, but this is just a forecast I'm doing to project myself ahead and handle some trades. Remember that trading is more about the confidence you have in your scenarios and the timing you're going to trade them. And then future will tell if you were right or wrong. As long as you've been managing the risk accordingly, you should be just fine in the long run. So this is what I think. In terms of trend lines, I think we're going to obviously play this trend line, which means going in there, we're probably going to get to touch again this trend line to find the selling entries in here. All right, fit that trend line, probably try to break it just a bit to bring in some bulls, and obviously this is where things will really deteriorate, when we're going to have to break those trend lines, break those lows, and that people will say, oh shit, we don't having a head and shoulder pattern, because this is exactly what you're going to have to talk about. When we're going to make something like that, people will tell head and shoulder pattern. So definitely we're going to break and make historical highs. And this is exactly when we're going to fail that structure, that everybody will just surrender and the market will fall probably like a knife. That's to be expected, because normally this final wave, as I said, is normally going to extend 127 of this one, which is pretty fucking far from current prices, and it should lead us to this area, which is 2150. And god damn it, imagine that if we go there, people will really be panicking, because in here will definitely be bear market, will be 27% out of market tops, and you can very well expect that we can make some nasty lower shadows in here to eventually trap a lot more people. All right, but we'll be retracing down to those previous heights. And does that really sounds like the end of the world? Absolutely not. It's just normal to me. We're consolidating. As I said, we're going to fuck the Trump trade, and that's definitely what we probably will do. We'll see about that, but for now, I think bearish and holding on to the current scenario is just what needs to be done. So I'm not changing anything, I'm just patiently waiting for us to reactivate in that area. I pretty much expect that we can have a set, let's say a couple months or a quarter from now, just ranging a bit and preparing for that trend, and I very well expect that the next earnings season is definitely where we're gonna get to that freaking trend with pretty much disappointing earnings that may be down the road next time. Alright, I hope you've been learning quite something again today, and that it's been educational. Regarding the forex market, I think that we had everything we need. Yen is kind of strengthening today. What do we have? What else do we have? We got VIX down the support area. As I said, we've got all quartered. Basically, oh shit, not this. So yes, we got ETF demand still at the top, God knows for what reason, but yes, still the retails are buying and filling in with a lot of their savings that they're probably going to they're probably going to lose in the future, because that's generally how it is when retails are getting in the market. It generally means we're fucking like trending, especially when we've been growing for 10 years. So as I said, I know how cold this may sound to say this is how it's going to happen, it's not going to be pretty, but this is just what happens every fucking time, and every time it happens people say no, this time it's going to be different, and it never is. This is what really bothers me each and every time, this capacity of fighting back really obvious things. I mean, anytime the retailers are getting interesting in the market, they want to invest because they think it's going to go higher, and they're going to buy to sell at higher price. They want to be part of the process of making money through the market money creation. Generally, when they get through this is where the nasty part starts up, and they end up losing probably at least 30% of their capital for those who don't use leverage, and generally tend to lose more for those who will stupidly buy leveraged ETFs. So I'm sorry to say that, but this is definitely where the odds are for us to head into a recession kind of trades, even though how bullish some people may look like to be, and some financial analysts could be as bullish as hell. If you follow analysts, you're most likely going to lose money. So I bet you should most likely follow traders, and traders are fucking selling for 2 years. And I tend to believe that we're most likely going to be right. But I can't tell for sure, so just manage the risk. Don't risk your house just on selling the SPX, and the best way to do this actually is just not necessarily selling, but just making sure you're not buying that shit, because you're going to buy what is probably going to be a market top, and we may retrace up to those prices one last time. Remember what we've done means that if you're buying the current prices, you may have just one final way to exit this coming right after, but just remember one thing: We never know. So this is why we try to play timings with a decent risk management. You definitely don't want to buy a resistance and don't want to buy a market could just lose another 25% from now. If you want to buy in here where the timing will be interesting, or you should have bought in here. Remember, I've been buying that dip, and I took my profits in here because I thought it was too dangerous to remain bullish in a market that has so much bearish potential. And you've seen me reversing since then and searching for bearish entries in the SPX for that very same reason. All right. So we're here in the expected area. That's probably the last area I'm ready to trade. So I've been taking a final trade yesterday, and we're going to talk about this one. Been taking a 1 hour chart time frame signal with that divergent structure. So we're diverging into a very fucking late stage trending. No matter how brutal this has been, this is definitely the end of that game that we're having right now. And I don't think we have any more gas to go higher than that. We're definitely in the expected area. I've defined two underlying supports in this area. So this wave one, we tried a first support in here, and we had a second one that we've been down to, which is in here, and we're exactly trading in between. Also fits the range scenario in which we've been. I was expecting us to fail in here between 61 and 76 because statistically this is where we end up. But we just pushed a little bit higher to extend to the wave one's bottom, and we're trading right in here right now. We're right in the expected area. Normally we should have some strong bearish reactivation soon, but don't expect the market to trend just right now. We're going to build this trend sub-wave, so don't forget about risk management. Don't forget to profit take partially, and don't forget that whenever we get to here, which is 2600, you absolutely need to secure and lock on the gains.